Before we dive into today's detailed EURUSD analysis, it is essential to emphasize that trading foreign exchange and other financial instruments involves a high level of risk. Market exposure may not be suitable for all types of investors. The content provided in this video is for strictly educational purposes and should not, under any circumstances, be construed as financial advice or a direct investment recommendation. You are solely responsible for your capital management and the decisions you execute in the market. We are looking at a daily EURUSD chart in its raw state, free of indicators or annotations that might bias our initial perspective. We observe a recent price history highlighted by a strong bullish impulse followed by a phase of correction and technical consolidation. This blank canvas serves as the ideal starting point to objectively identify the liquidity levels and areas of interest that we will define next. We have plotted the previous daily highs and lows as key liquidity zones. During the London session, prices respecting the previous daily high, PDH. The blue arrow marks the current rejection at this resistance, while we monitor the lower red levels as potential retracement targets. On the 12-hour time frame, we refine the closest liquidity zones. We have identified a fair value gap, FVG, signaling a major price imbalance. The marked LH and HL levels will act as liquidity magnets, where we expect EURUSD to seek efficiency before defining its next institutional move. We drop down to the 8-hour timeframe to precisely observe the local price action. Notice how the pair has reacted exactly at the yellow line, consuming the liquidity accumulated at that upper level, LH8H. This liquidity sweep is a key technical signal that often precedes a shift in momentum or a reversal, indicating that price has collected the necessary orders for its next move. We are refining the 12-hour fair value gap by adjusting it to the 8-hour timeframe. This refinement allows us to define a much more precise area of interest. As you can see, price is already showing sensitivity as it interacts with the upper boundary of this new institutional block. On the 4-hour timeframe, we define a technical scenario based on the distribution of bearish liquidity. Following the rejection at upper levels, we outline a displacement path toward the 8-hour FVG. This movement aims to mitigate inefficiencies and capture orders in the lower demand zones, thus completing the institutional price delivery cycle. From the same 4-hour perspective, we outline a scenario should price decide to resume its bullish trend. After a brief retracement to mitigate the upper portion of the 8-hour FVG, EURUSD would look to break through the previous daily high, PDH, with momentum. This move would invalidate the current consolidation structure, clearing the path toward external liquidity levels located at the late January highs, marking a clear continuation of the upward institutional order flow. Dropping down to the 1-hour timeframe during the London session, we observe EURUSD developing a lateral formation or consolidation range. This structure is crucial, as it is building a clear accumulation of liquidity at its lower boundary, marked by the 1HHL levels. This type of sideways movement is often the prelude to an expansive drive, where price seeks to sweep the pending buy orders sitting at those lows before defining its true direction toward the lower order block. With only 10 minutes left until the New York Open, volatility is already surging. Following the 8:30 news release, we observe an aggressive liquidity sweep below local lows, validating the turtle soup model. This stop hunt suggests institutional intent to build long positions. However, it is vital to note that the previous daily high, PDH, remains a firm barrier that price has yet to break, keeping the structure at a key decision point just before the start of the American session. We are now on the 5-minute timeframe at 9:32 a.m. New York time. Following the official open, price displays candles of uncertainty, reflecting the typical supply and demand struggle during the opening minutes of the session. It is key to observe how EURUSD precisely respects the previous daily high, PDH, and finds support at the identified 5-minute order block. This technical confluence zone is vital. As long as these levels hold, the market indicates a structural pause before deciding its next volatility expansion. When observing the chart on a 3-minute timeframe, the price action becomes much more telling. Upon interacting with the previous daily high, EURUSD leaves a clear rejection candle with a prominent upper wick. This visual signal confirms that supply is stepping in aggressively at the PDH level, stalling the initial bullish momentum from the New York Open. This technical behavior reinforces our resistance zone and suggests a pause or a potential retracement toward the lower order block. On the 1-minute timeframe, I spot a high-clarity scenario to execute a trade. I've decided to enter at this level, and I recommend staying until the end, as I will break down exactly what I visualized to take this entry and how the technical management unfolds in the following images. In this phase, we break down two key technical elements. First, the fair value gap or FVG, which marks the imbalance that price came to mitigate. Second, the MSS, which stands for market structure shift. This happens when price breaks the last low that created the high, confirming that sellers are now in control. However, my entry decision was not based solely on these two signals. I have detected another fundamental technical confluence that I will show you in the next image, which fully validated this trade. Here is the deciding factor I was mentioning. We are trading a high-precision model known as the unicorn strategy. As you can see on the chart, price has not only reacted to an FVG but has done so in direct confluence with a breaker block. A breaker block is an order block that failed and was subsequently breached, now transforming into an institutional resistance zone. When an FVG and a breaker overlap in the same area, the probability of success increases significantly, providing us with the definitive confirmation for our short entry. This is the missing puzzle piece that completes an expert-level analysis. Observe price behavior at this level closely. Although EURUSD shows a temporary bullish reaction upon interacting with the 5-minute order block, this movement only serves to retest the upper fair value gap. It is crucial to understand market hierarchy. Despite these small local reactions, the unicorn model we previously identified is what truly drives the primary narrative. The confluence of the breaker block and the FVG acts as a much more potent institutional magnet, confirming that any momentary bounce is simply an opportunity for price to seek liquidity before continuing its definitive bearish expansion. As projected, price is making a technical retracement, heading directly toward the breaker block. It is fascinating to observe how this area, which previously acted as a failed support, is now functioning as solid institutional resistance. EURUSD is testing the base of this block along with the MSS level, validating that sellers maintain absolute control over the order flow. This reaction confirms our entry was precise. The market is utilizing the breaker to collect the necessary liquidity before launching the next bearish drive toward the SSL levels or external liquidity we have marked below. Pay close attention to the blue arrow positioned over the breaker block. It is impressive to see how price reacts with surgical precision upon interacting with this zone. EURUSD attempts to push higher but is immediately rejected as it touches the block level, turning what was once support into an insurmountable institutional resistance. This reaction is no coincidence, it is visual confirmation that large institutions are defending their positions. The precision of this tap on the breaker gives us the definitive signal that bearish momentum is fully active and price is ready for its final expansion toward the lower liquidity levels. Now, observe the new blue arrow pointing to the price movement toward the lower zone. As anticipated, EURUSD has launched an aggressive expansion to consume the liquidity accumulated at the SSL or sell-side liquidity levels. This liquidity sweep is the fuel that drives the institutional market. Once price precisely rejected the upper breaker block, its natural objective was to sweep the local lows where buyers' stop losses are located. We are witnessing the completion of the price delivery cycle in real time, validating our overall trade management. Notice how price continues its downward trajectory, moving deeper into the 5-minute order block. In institutional trading, we know that the most critical area of an order block is its center, also known as the mean threshold. It is at this specific point where we validate whether price will react strongly or simply continue its expansion. Due to the high sensitivity of this midpoint, we have placed our take-profit target right within this zone. The blue arrow shows price reaching this key level, allowing us to successfully close the trade by capturing the bulk of the displacement before any potential technical bounce. Pay close attention to the blue arrow at this exact point. Upon reaching the deep zone of the order block, price reacts immediately with a small-bodied candle. This reduction in candle size and the shift in the speed of the move indicate a loss of bearish momentum and the influx of institutional buy orders. Educationally, this teaches us that order blocks are not just levels on a chart, but high-friction zones where supply and demand reach a new equilibrium. Identifying these subtle reactions is what distinguishes a professional trader from an amateur. We have reached the end of this detailed EURUSD analysis. If this type of educational and technical content adds value to your journey as a trader, I invite you to subscribe to the channel and turn on notifications. Don't forget to hit the like button and share this video with other users who might find this methodology useful. Your support is essential for me to continue sharing these trade setups. If you have any questions about the concepts applied today, please leave them in the comments section. I always respond personally to help you keep improving. See you in the next analysis.